Good morning, traders. It's Monday, February 3rd. Taking a look at the charts, we got lots of price action again. We got obviously a little bit of a tariff war going on with the U.S. slapping Canada with tariffs and Canada coming back and slapping the U.S. Although we're such a tiny little country in the Canada here, it's like really not a big threat. Although everybody's kind of doing tit for tat, just throwing things around and shaking things up. Of course, that has the tariffs on Canada have made the U.S. dollar drop, or sorry, the Canadian dollar drop, and the U.S. dollar rally. So we've got a big pop in the dollar, up about, well, it was up about 1.5% at one point, but up about 0.75% now. Canadian dollar took a hit because it's going to hurt our economy. And if we take a look at the actual exchange, we saw a pretty big exchange. We went up to $1.48, which is pretty big. We haven't seen this, I think, since 2003, I think it is. An exchange this high. Again, I've been talking about, I believe we're going to see $1.63 all the way to potentially $1.74 exchange. That's what the charts have been pointing to. And we never know what the news and things are going to come down the line to potentially create it. But overall, the charts have been saying this for a while, which is why we're naturally long and holding everything in U.S. dollars. Just our account sitting in U.S. dollars is going to benefit from the long-term trend of uncertainty and the rising exchange between U.S. and Canadian. Now, overall, when we take a look at the charts, obviously we're going to have a big gap down this morning. We have the NASDAQ down 1.75%. We have the S&P 500 down 1.6%. If we take a look at a couple things here. If we take a look at the 30-minute chart, we had the markets close last week in an oversold panic selling territory. So tariff news drove the market down. This morning, the S&P 500 is down at 592, which is, if we zoom back on the chart, 592, which is right down here. And of course, there's a gap here. It was also a pivot low through here. We got up to this level. We had news hit us down. Now we're having news come back down to this level, flushing out this pivot low. We're probably going to see more panic selling today. And we are still holding in an uptrend, barely, but we are. Typically, gaps to the downside on news, panic selling. The VIX is up as well, back at a resistance level. If we take a look at the VIX, it's right back up to a high we saw just about a week and change ago and a few weeks ago. So we're at that kind of tipping point where this market needs to find some traction and hopefully not get hit with some more news. But overall, the market is going to be in this oversold territory, and hopefully the dip gets bought. Now, if we look at the 10-minute chart, we haven't talked about spikes in a little bit. We did mention it the other day, but typically we have these price spikes. I always look for a third, a 50%, and 100% move, meaning if we see a pre-market spike, we tend to see the price of the market move and fill one, two, or all three of those within the session. We had a spike down on this was Friday, hit the first level, ended up pushing a little bit higher, then hit all the other levels and continued to sell down. This morning, we got a very big spike here as well, telling us that we could see this big morning gap. This is a news-driven gap. Eventually get filled to a third, halfway, and potentially come back and negate that move over the next potential session or so. So it'll be very interesting to see how all this unfolds. I think there's going to be a little bit of a shock with a lot of people, so we might see some more early morning selling when the stock market actually opens for the general public to panic and to put all their orders through, and we'll see if it gets bought up. So that's kind of where we stand on that regard. Now, if we take a look at the hot list and take a look at our indexes here, the Russell 2000 is now kind of kicking into a distribution mode. It's risk off, so money's been moving away from it. That's not a good sign, and we're starting to see some big selling in the Russell 2000 in general. The Russell 2000 is a little bit of a leading indicator. It has been dramatically underperforming, and it's one of the reasons why I believe we're still in a stage 3 topping phase, even though the major indexes that are tech heavy are making new highs. It's completely camouflage, making everybody think we're in a very strong bull market, but we're actually not. Most stocks are not really participating. So that is a warning sign. We also have the NASDAQ in a risk off mode as well, saying that money is flowing away from that pocket. And so those are two kind of leading areas to be aware of. Now, the last time we saw Trump in power and he did tariffs, it was back in 2018, 2019. Really, we didn't actually see inflation or anything take place. It didn't actually make a big difference, so it'll be interesting to see how all this plays out. It could be very similar. Surprisingly, things never, we saw actually things move down in the opposite direction. So this doesn't mean everything's going to jack up in pricing, because it didn't happen last time. I'm not saying this time is different. That's kind of probably the biggest problem with a lot of people. Everybody always thinks, well, this time is different. Really, the key is not to think it's different, just to follow price and see what happens. Who cares if you're right or wrong in terms of trying to guess it? Let's just follow price and manage our positions and kind of go that direction. If we go take a look at the rest of the markets, the dollar, let's take a look at the dollar index. It is trading up, had a nice pop in value. It actually, we're seeing gold move up, although gold's been pretty choppy. It's sold off the previous session, and it's had a very strong rally. It kind of sold down yesterday, last night, and is recovering back as a defensive play. People are getting nervous. We've talked about how gold is in that phase that we're going to have all this chaos. We're going to, the stage 3 is typically where we see volatility. We see sectors rotating in and out of favor very quickly, and people move to gold. And that kind of acts as a defensive warning indicator that we are still in this stage 3 late stage market. If we take a look at Bitcoin, Bitcoin was down about 11% in overnight trading. It has since recovered and bounced back, down about 6.75%. Again, this is just further confirmation that when there's fear in the financial system, it hits Bitcoin. There's still a positive correlation with Bitcoin. Wherever the NASDAQ goes, if it's an up day or down day, Bitcoin generally follows. It's kind of similar as Russell 2000 a little bit as well. They are kind of the same play. I talked about this, a while ago, like a year or two ago, that as soon as Bitcoin gets added into the futures, into the financial system, it's now stuck in the tides of the financial markets and the manipulation. The markets are more or less rigged in a way. They all kind of move together, and I'm going to be doing some videos on this in the near future and sharing that stuff. But again, once we see big selling in the stock market, Bitcoin is generally going to get hit. And I think eventually it's going to have a huge correction. But right now it's shaking things up. Obviously, another news-driven move. And Bitcoin is just a very fast-moving asset class, or asset, or investment, whatever you want to call it, crypto. So it has a lot of emotional traders in there. And that, a little bit of news sends it very far, because there's a huge reaction among holders of it. Now, if we go and take a look at the chart of bonds, we are seeing bonds continue to kind of drift up towards the 50-day moving average. Overall, yes, it's been moving up. I know some people are getting really bullish on it, but it is really still trending lower. A series of lower highs, lower lows. It's not, anything too exciting yet. In the grand scheme of things, it's still trying to carve out a massive bottom, a multi-year bottom. It's going from a topping phase where it put in a major top, and then stage 4. Now I believe it's kind of in a stage 1. So we're getting there, but it hasn't turned the corner to really come up, in my opinion, just yet for us to want to get in. We want to be in something when it's naturally going down or up all the time, and we want to be in favor of that direction. If we take a look over at crude, we do have oil up 2.5%, so it's having a nice little bounce. Obviously, we got energy tariffs, 10% on oil and energies. I think natural gas. We got natural gas up. It was up about 10% this morning. There's a 10% tariff, and all of Canada's natural gas goes to the States, so that's probably why we're seeing it jump 10%. At a 10% tariff, and it's got to go up pretty much that much. That's kind of my thinking anyway. But if we take a look over at the weekly chart of the SP 500, obviously we had our trend signal, our rising tide environment. This was back in February 2022 or 2023. The markets have been going up ever since. We are still in a rising tide environment. Now, it's not a raging bull market, but it is still a bull market, if we're going to call it that. And we had that big gap down last week, and the markets recovered a bit. This week we're going to gap down back at this level, and we'll see how we go, if it's going to move lower or higher from here. But in the grand scheme of things, when you look at the types of movements we see all the time within a bullish phase, last week's movement and this week's little drop down isn't, that big compared to all of these other pullbacks and drops and larger corrections that still hold the bull market. So don't get too caught up and thinking everything's coming to an end just yet. I do think we are getting darn close to a major market top, but until it's proven, until the trend is fully turned around, we are not betting against the market. We're going to continue to be long investment style, and of course we'll move in and out with the shorter term trends with our shorter strategies, our ACS adaptive compounding strategy. Anyways, that's it for now. Talk to you soon. Bye-bye.